right. Tarek, thank you for being here.
Yeah, it's exciting. Thanks for having me.
So, yeah, prediction markets, as Connie said, are a really interesting space right now. I think, both on the information kind of side of things and also on the regulatory side, there's a lot of interesting things going on, and you're kind of at the center of it. And we're going to get into all of that. But first, I think it's important to kind of just talk about what are some of the real things that people are predicting on your market. So I pulled up a few that I pulled last night. One question that you can answer on Kalshi is recession this year, question mark. And it's currently a 56% chance, yes. Another one that I liked was Minecraft movie, what's the Rotten Tomatoes score? It's actually looking pretty good for the Minecraft movie right now, if anyone was wondering. And of course, you can bet on the best AI this month. You can bet on when Elon Musk will leave Doge and, the presidential nominee for the Democrats and sports, which those two are particularly interesting. But what's your favorite?
I always like the TikTok market. I've liked it for like a year or two now.
The TikTok ban?
Yeah, just keeps flipping, and they keep fighting over it, and it's been really volatile. And it's one of those sort of unique. I mean, the election, a lot of people, obviously get excited about the election because everybody cares, but there's a lot of resources that are put into sort of forecasting elections, for better or worse. But something like TikTok ban is something that you just really couldn't price before. I mean, it's just really one of those things that was really left to dinner table at Thanksgiving. And it's like, your uncle's opinion was the only thing you had to rely on for this. So I really like these sort of markets that like are truly they're very important. Like this is something that is actually really important. I mean, you have a whole swath of the economy that could just get eradicated on the other side, if the other side is right, like our kids are being manipulated by China. So like it's something that's pretty important that we didn't have any sort of gauge of what was going to happen before. And so I like this market a lot.
Yeah, no, that's an interesting one. But I did want to briefly talk about your kind of history getting into all of this because I believe you interned at Goldman, and you also worked at Citadel. I think you also had a brief stint as an AI researcher, according to your LinkedIn. And so that's broad. But I also just kind of wanted to talk, like, what did you see working these early jobs in financial markets, and just why did that prompt you to become a startup founder in this kind of analogous field? And also, what is different about working as a founder versus kind of working in these banking jobs?
Yeah, a few things. I mean, it's like super different, but I mean, we'll start sort of a little bit of the history. But I went to MIT. We both, Luana, my co-founder, and I, were not the sort of entrepreneurial product type. I mean, Ethan, I don't know, you started a company at 18, 17, looks like. It's fucking crazy. I thought I was young. I started mine at 22, so that was cool outside of this room, I guess. But like we were not product builders or entrepreneurs, like, or even trying to. We were just gonna go into trading. That's the thing that was exciting. I was like a math geek. In some ways, I still am. But when I spent time at Goldman, I spent time at Citadel, and the thing that I was naturally gravitating to. So I like trading, but I didn't. I found myself obsessing more over things like why are we even trading this thing? I found it fascinating that you could walk in, and I encourage anyone to do it. If you haven't walked into a trading floor, you should do it. It's kind of a weird experience where you walk in and you see like hundreds of people that are getting paid, something like 7-figure salaries to trade something called swaps. Like, it's so, like, how do you even get here? What even is a swap? So like, it was interesting. And then I really liked thinking about like what was financial history? How did we get to things being the way they are? And how did we develop all these financial instruments? Why are we even trading them? And then number two, and this example I always like to give, in 2016, I was an intern. I was very young. So pretty naive, kind of asking all these questions. And the thing I noticed at the trading desk that we're in is like all these clients, the sort of hedge funds, institutions, kind of these what you consider very fancy traders. So it's not like average retail individuals. They didn't have a view on the instruments, on the financial markets like you would traditionally think about, like the equities or credit or bonds or whatever. They had a view on whether Brexit was going to happen or not. So that was a big chunk of people. And then they had a view on Trump. whether he was going to win or not. And it was these discrete events, and they wanted to either get exposure to those events, so bet on these events or hedge against them. And so we would do is like a typical investment bank is like we would sell them a bundle that was super expensive, very opaque, and kind of not really fit for purpose, but we'd sell it very well, so they'd buy it. And so a lot of people, one example, very simple one, is like we'd sell these sort of option structures that were effectively a short an S&P. It's like if Trump wins, you should short the S&P, obviously. Trump won, so they were right, but then the S&P, rallied, so they all lost money. And so there was this sort of simple idea, which is like, what if we sort of built a financial market for the thing that they're asking about? Like this simple question, like, will Brexit happen? That you could actually price that. And if you structure that market and like people get paid $1 if it does and zero if not, then effectively the price at which it's trading, like let's say that people are buying at 50 cents, is actually the forecast, the probability, the chance that this event happens. And so we got really excited about this idea because one, if you could build that, it should in theory be one of, if not the largest financial market because it's the broadest, it's capturing the largest universe of things. And two, it'd also be very useful because then you have this notion of you're aggregating the wisdom of the crowds and you're having people with real skin in the game being paid to forecast the future. So it's just making us all smarter about the future, and that felt like a very worthwhile thing to build. So we decided to do it. It was illegal at the time, and we can talk about that, but
What is it now? Legal?
it's pretty legal now. We've had to eat a lot of shit over the last 5 years, but it was totally worth it. I'd do it again in a heartbeat.
Well, let's talk about a little bit more of the quote unquote shit that's being flown at you right now. You were just sent cease and desist letters by New Jersey, Nevada. They were the first two. Now I recently saw Ohio and Illinois. Am I missing any others? Montana. Got it. I thought you would know. So you responded
there may be some one or two other one that came to there.
It's hard to track. There's a lot. So so just for background of people. So you guys are federally regulated by this CFTC, but these states kind of came in and said that some of the sports betting that was going on the platforms was not. They thought it was not allowed. They thought you should have to be licensed. That's my understanding of why they wanted you to stop operating in their states. And you responded by suing them. And you had this kind of big post on LinkedIn right when you sued them. This was just earlier this week, by the way, or 2 weeks ago.
I don't remember.
Yeah, long week. But it's so like, you said that Kalshi is a truth machine, and that this is like a necessary service to kind of expose the truth about the world. And you kind of had this very bold take about what your platform really is and why they shouldn't be allowed to stop you. So can you talk about, why do you think that these state gaming regulators shouldn't be allowed to regulate you?
So maybe just a little bit of history. So, I think it's important to answer that question. So we had this idea, we decided to start it, and then we realized that this was not allowed in the U.S. And so we sort of defined, and we looked at the history of these markets, and in some ways it's true. Prediction markets are actually this notion that a lot of people have been excited about for a long time. People wanted these to exist for a very long time because of the things that I just described. But the sort of bane and the thing that has really choked them is the U.S. regulators have generally seen them as a bad thing and something that should just not be allowed. So what we decided to do is like we wanted to address that elephant up front. We're like, if we wanted to build this company, we have to build everything regulated up front. We will literally go to the federal government and subject ourselves and say we want to get regulated, and we'll bang our head against the wall until you regulate us. And the reason we did this is like I didn't want to build a company that had a curse of scale. So like the bigger it got, the higher the risk, which is usually what happens if you're unregulated and operating offshore or in the shadows. And number two is I think we always wanted to attract sort of institutional liquidity, and now we're seeing the results of that, like the Schwabs and Robinhood and Citadels and basically the banks integrating into the exchange the same way that they would be trading on the New York Stock Exchange or CME or sort of the NASDAQ, the large exchanges you would think about. So we spent 3 years and a half. It was a truly brutal period getting regulated by the CFTC up front. CFTC is a Commodity Futures Trading Commission. A lot of you may be familiar with the SEC, which regulates stocks. CFTC regulates all other types of financial derivatives or financial instruments. And we did get regulated. We launched the exchange, and then we had this other issue which they didn't let us do, the election market, which has been illegal for since the Great Depression, basically. And then we sued the CFC over it, which so we sued our own regulator. We can also talk about that. Our board was not happy about that, but we believe we were right, and we won in October. So we won 3 weeks before the election, uh, uh, from the DC Circuit of Appeal, and since then the company has grown truly astronomically. Like the numbers have been just absolutely crazy. This year we entered sports, so we rode election, we grew a lot, launched a few brokers, and entered sports. A few things: generally favorable administration, a lot of customer demand, and there's a very strong argument around the economic use case around sports. Um, the real reason why states are kind of sending us these cease and desist is because there's like massive casino lobby that's unhappy about this. Um, the the core of why we're not necessarily very concerned is like we are regulated at the federal level, so we're regulated by a federal regulator, the CFTC, and there's this thing called federal preemption, which some of you may be familiar with, but we're we're basically under exclusive jurisdiction. Like the state law doesn't really apply when you're a federally regulated exchange. The same way that, for example, like in Kansas, it's illegal to trade grain futures. Obviously, it's not illegal to trade grain futures at the federal level, and you can do it in Kansas, even if the state law in Kansas says that it's illegal. So that's what's really happening here, and that's why we sued these states, just to clarify. Like we are federally regulated. We don't really have authority here.
Right, but they know that you're federally regulated. Like it's not like they don't
I
understand
mean, I mean,
that.
it's funny because the Nevada one, like they leaked it or released it or tweeted about the cease and desist before it even got to us. We had to call them like 4 times. Like, are you gonna actually send us cease and desist? Because legally, you cannot receive a cease and desist on Twitter. You have to actually like, I have to receive it like physically, because otherwise I can't do anything about it. So I mean, it's like a whole press component to this.
And I mean, to be clear, the letters say that they take issue with the sports betting that's going
Yeah.
on your platform. I mean, and what they're saying is that you need to get a license from us, from each gaming commission in each state, if you want to do that. So why are you opposed to getting
Well,
licensed?
we have a license by the CFTC, so we
No,
are.
but for them.
Well, that's a little bit like saying, like it's literally the same thing as like if states woke up one day and sent a cease and desist to New York Stock Exchange saying like, hey, wagering on something that is outside of your control to make more money requires you to have a gaming license in my state. Now the New York Stock Exchange has to get 50 state licenses to do their business. So it's like um, we just don't fall under that model. We are literally like a financial exchange, but the underlying that you're trading is events, and our regulator is the CFTC. And so if the CFTC tells us to stop, we will absolutely stop, and if they don't, then we won't.
So, I mean, I think the core tension in this is that you guys kind of see yourself as a financial market, kind of more something like
Yeah.
that. And these guys are kind of treating you a little bit more like you're doing like sports gambling. And sports gambling is only legal in 39 states, I believe, not the whole country, but you operate in the whole country. So it seems to me like I would like you to answer what is the difference between gambling and prediction markets.
Yeah, I mean it's interesting. Like that's the question that's been sort of pretty central to this company from its very beginning, and it is actually a very potent and interesting question. The answer is not simple, but the thing I'll say is like actually there hasn't been a single financial derivative that has been set up in the US or otherwise that hasn't been called gambling at the beginning. Like it's consistently the same thing. And so, going back 100 years, 120 years now, exactly 120 years now, in 1905, there's a Supreme Court decision that legalized grain futures in the US. And it went all the way to Supreme Court. The whole question was like, is trading on grain futures gambling? And, there's a whole part that was saying it's gambling because some people are speculating, like, they're putting some money on something they don't control to make more money. So yes, that does fall under some definitions of gambling. Um, and the other side is like, well, that's true, but, that's not the only purpose of this market, and that's not the only thing that justify the existence of this market. There are other things that come out of it, which is like some people are actually managing risk, including the farmers, which makes these things extremely important. And the second thing is there's this notion of the existence of these markets allow you to discover prices, the price of grain, which helps people make more investment, be smarter about investing around their farms, and so on and so forth. So it has economic utility beyond the speculative um, activity, and that's what makes it a financial instrument, not a gambling instrument. There are other simpler sort of, and the one that I really like is generally sort of, if you're creating an artificial risk to bet on it, that to me falls really under gambling. Like if we roll a dice and we bet on it, that is gambling. That there isn't sort of, but if you're betting on sort of the outcome of of whether Brexit is going to happen or not, like there's a real event that impacts real people. Some people may want to speculate on it, and that's fine. The same way they speculate in the stock market, but some may actually want to reduce their risk, or very simply know, like, okay, there's 55 or 60% chance that Brexit happens, which by the way, at the time, people thought it was impossible. Everybody got surprised and shocked when it happened. And so there is an economic utility outside of the activity itself, basically.
Right. I mean, I think that, you have some convincing arguments. I know you guys have a lot of very strong lawyers who are helping you kind of come up with this stuff right now, frankly. But I think it's ultimately just a bigger thing going on. Like there's a battle kind of between these federal regulators and these state gaming regulators. And you guys are totally at the center of it. Very interested to see how that plays out. However, you guys do have some ammo at the federal level to, some sway there. I mean, you have recently put Donald Trump Jr. as an advisor to your company, and just some other moves that have happened recently. I think your top lawyer actually just left to join Doge, and then someone who used to be a board member at your company is now heading up the CFTC, who regulates you. So it seems like there's a lot of kind of back and forth between your company and at the federal level. How key is the Trump administration to you guys continuing to exist as a platform?
I mean, we existed a year ago, and there was no Trump administration. So I don't know. I mean, I think like the thing I would say is like there's definitely we definitely see sort of a more pro innovation in financial services specifically administration. I cannot speak about kind of more broadly, and there's different industries that disagree on this point. But like we did see sort of the last 4 years, and it's just kind of you talk to anyone in financial services, like the last 4 years were difficult for anyone who's trying to build, especially a regulated financial services company. Like it was actually easier to go offshore, do things in an unregulated way. If you sort of try to engage and work with regulators, it was difficult. And I think there was sort of this general apprehension, this general sort of reaction to like if you are trying to do something new within financial services, it's generally a bad thing. There was sort of like you are doing something bad unless you prove otherwise. I think the important thing right now is like there's a few things. Like one, after 2 years and a half of having sued the federal government, we were actually right. And by the way, this was like a Biden court of three Biden, pretty extremely liberal judges ruling 3-0 in our favor, right? So it wasn't sort of like, two Republican versus one. It was three liberal judges sort of, ruling in our favor. And so there was, number one, we were right on the law. Like we are actually squarely, unequivocally right on the law. And that's always been our principle. If you believe and we read the law and we are right on the law, then we will do it, because we follow the law. It's not about what we like or dislike as regulators. It's about following the law and applying it uniformly to everybody. And so that's number one. Number two, we did list the election market, and a lot of the concerns around sort of, are we going to break democracy by doing this? We're kind of like mooted, right? Like in some ways, actually, this was the only source of truth that people had about the fact that Donald Trump indeed had 63% chance of winning the U.S. election.
Right. And they really championed you and other prediction markets for kind of showing that.
Well, that's because the odds were up, right? When Harris' odds were up, not so much. Like, the other side was championing us. So whoever's odds are up, and I expect this for 2028, is going to be championing their odds being up, and that's fine. That's part of the game, and it's cool. But the important thing is like a market-based mechanism does actually work better. And, if you look at polling, and, the polling accuracy has been going down, literally like year over year for a decade. It's just worse and worse. Obviously, the media is extremely polarized. Like, if you go on Fox versus CNN, like you literally are playing two separate movies that have nothing to do with each other. I mean, it's insane. And this was true, by the way, even on election night. Like, and we saw an insane spike during election night. And we still don't know because, we use this service called Netlify that went down for 2 hours. So we don't know exact data. What we do know is we had anywhere between 300 and 500 million unique site visits on election night. And that's a testament to there was like a few hours where people didn't know who was winning, and actually the market odds were the only source of truth. And so, that's another thing that's kind of going in our favor, which is like we list the market. It actually was extremely helpful, not just to people, but also people in DC. And people are realizing like actually this thing that we were fearing is actually, a force for good. And so I think there's quite a bit of momentum behind us to do more and more. And I think that's really what I think is going to be really helpful as we engage with regulators and as we engage with Congress.
Right. Yeah. No, the prediction markets and Kalshi has been very popular. I know tons of people who use them, every day to, get a data point about the world. And, I think it's been really successful so far. And I'm excited to see what you guys do next. So, but I think we're at time. So, Tarek, thank you so much.
Great. Thanks for having me.